Hey, had to jump on here and talk to my realtor friends and potential clients. A lot of cool stuff happening this week in the housing industry. Want to make sure that you're warning your buyers, or if you're a buyer of ours, that you're paying attention to the market. So let me share my screen with you. Key breaking news as of about noon today. Uh, they retracted the controversial DTI loan level price adjustment. So a lot of our clients, better clients, been griping and fussing, saying they don't want to pay for lower credit score folks, and so they rescinded that. Lasted about 2 weeks. Hey, go figure. Government trying to figure stuff out, but good news, they got it right, I believe. So that's fresh off the press as of about noon today. So want to talk to you also about interest rates. So you notice the green candle here, man, we're May 10th, did not give us the news quite as strong as we did, but we're predicting it's going to be a great summer. And so I want to show you some slides talking about that. But when the green candle, there's like lots of room to the upside that's going to help on our interest rates. So we'll drop the interest rates as we go up. So looks like everything is pointing in the right direction. So be encouraged if you're in the market or one of our realtors. Don't sit on the sidelines. Time to get in the game. So uh, here's what inflation and the mortgage rates do. And so while annual inflation remains elevated, it's about 5%, so it's still higher than we want it to be. It has declined sharply from 9.1, which was last June. And so lower inflation typically is going to help both the mortgage bonds and mortgage rates improve. So this is just another sign that we believe the interest rates are going to get better. So data is backing it up. The times are getting better. So be encouraged. Inflation mortgage rates, here's another, I won't go into that, but this basically shows you that inflation drives the mortgage rates. So if inflation's going up, then our mortgage rates can be going up as well. When it starts to turn over like it is right here, and what we're starting to see is it's starting to decline, that's going to help us get lower interest rates, which is going to in turn create some more business for everybody. And so pay attention. Oops, went too far there. Uh, so here's what typically happens. Just bottom line, the housing is going to stay strong through recessions. So Case-Shiller showed us this, and basically here's what we see happening is that housing in a recession, housing remains strong, and especially here in Texas, here in Houston, man, that is for sure the trend, that our house prices are going to continue to go up. So with limited inventory, lower interest rates, house prices are going to be up. That's part of the motivation we say for getting getting your house done, getting it under contract now rather than wait until there's more people in the market. So where is inventory headed? So if you see, trying to find a place to hide here, uh, here's what we've seen. So completions versus formations. Notice the formations in the blue, completions in the gold. We continue to trend up. Formations, we've got a lot of housing and inventory on the ground. We're seeing completions continue to improve, and so we need more inventory. That's going to increase the the market for us and business for all of us. And so be encouraged. We're still trending in the right direction. So history of home prices, man, this graph and chart bottom line shows us that since 1941, we have increased in prices on homes. So our values have increased 73 times out of 81 years. And so if you look at these, here's the increases over here. There's been a couple of years that we saw declines, 2007, 8, 9, 10, and 11, when we were trying to fix a lot of stuff in the mortgage industry. And 1990 and 91, we had small declines. But be encouraged, man. It is still a great time. We can help you with investments. If you're buying a primary house, whatever you're doing, we'd love to be a source of information for you on that. I had a friend call last week and say, man, I'm being told to sell now because our prices are fixing to drop. I told him, I said, man, based on what? Based on what? Those friends, they don't know. They're listening to the wrong news. Again, I encourage you every time I talk, be careful about what news you're listening to. We have a boatload of fake news out there. So just be encouraged and guard where you're getting your information. We'd love to be a trusted source for you on that. So when rates drop, buyers re-enter. And so this is a quick graph showing, man, when 2021 hit, you were paying a lot of times for the same price that you'd be paying right now, the value 550, you were having to pay overvalue when tons of people drop back into the market. When rates drop back in this summer, another month or so away, you're going to have a whole lot more competition for that house, and you're going to be paying more than what you're paying now. Even though interest rates are higher, your net out of pocket net cost for that house is going to be a lot more if you continue to wait. So just get in the game as quick as you can. Hey, here's the 5-year forecast. There's a lot of different data. I think this is real conservative, where we're looking at a 10.63% increase on a $400,000 house. It's going to end up gaining you about $44,000. I want to tell you, I think that is ultra conservative based on Houston and Texas values. And so this is more a nationwide deal. Our values here in Texas are way better. So that's the net effect of what's happening in the market. Just be encouraged. Boy, call us. Let us walk you through that. We got all sorts of other data, and some of these screens I ran through real quickly. But man, bottom line, if you're an agent in the market right now, don't sit on the fence. If you're a client in the market, or if you're an agent that has clients, man, pass on this video. Have them call us, 832-347-8261. Eddie Skinner, the mortgage pastor. Man, here to help, here to serve. Would love to help you guys. Take care.